Good morning. Coming to you from cold, snowy Utah, where we've been inundated with snow for about a week and a half now. So, hence, I'm not in my usual aloha shirt and not at the desk in my office, but at our trading facility here in Utah. A lot has gone on this week, and we're getting a lot of answers to questions we've had for a long time. So I thought I'd share our perspective with you at this point, and hopefully give you an idea of where you're likely to see your portfolio move. The election was disappointing in some respect because the red wave never showed up. We had been anticipating a red wave, and we had increased our allocation over the last month or so to some stocks based on that, and we've cut back our allocations in the middle of the road for us. It's not negative, and it's not out positive where we were expecting to be. That plan has gone sideways because there's no red wave. And in looking back at why, there are a lot of factors. The Donald Trump factor was big. He had his candidates, and frankly, they didn't fare that well. And so there was some splitting of effort and expectation in the Republican ranks. Also, the Roe v. Wade decision by the Supreme Court seemed to move a lot of female votes away from the basic issues. Where the polls show that 71% of Americans are unhappy with the direction of government, feeling that our country's off the rail, that 71% did not vote accordingly. They voted differently for different reasons. So we don't have results that we can really bank on. But we do know that the red wave thesis, where you're going to have enough momentum and excitement behind it that would cause positive policy change, taxes, regulations, and those kinds of things, that's not going to happen. So we know that's gone. But in terms of control of the House and control of the Senate, that's still up for grabs, and down to a few narrow votes. So the vote counting continues, and our observation continues as well. Should the Republicans hold the House and get control of the Senate, then the Biden program is dead in the water. It's just not going to happen. And to move anything forward, there's going to have to be negotiation. And so we don't think we're going to have this headlong rush that we've been living through towards everything going green, towards penalizing oil companies and drug companies and anybody with money for that factor. That part of it I think has been diminished. But also the possibility of a big positive supply side effort to help the inflation problem is also probably on the sideline and not going to happen. So it's going to be house to house kind of warfare and volatile, but it's going to be very interesting and much unlike the waiting that we've been going through for 10 months. Okay, so I'm leaning positive, but we're not home yet. We got to count some more votes and see what happens. If we can just lock this thing up and have Congress and the White House go on vacation for 2 years, I think we'll all be better off, but we can't get that. So stalemate's going to be the closest thing to it. But this morning, you've got some news. The inflation numbers came in at 7.7. The bonds just took off. Government bonds just absolutely, it's the biggest move I've seen. They went up, and the yield on those bonds came down, meaning the interest you could have gotten yesterday, you can't get today. Okay, the interest rates are down. And why? Well, because inflation instead of being in the 8%, it's in the 7% range. And if that's enough to force interest rates down from 4 to 3% and on lower, you got me, because I can't figure that out. Throughout our history, interest rates more often are higher than the inflation rate. And it has to be to entice people to lend money. You've got to give a return to the lenders. Well, with bond rates, the 10-year Treasury bond dropped to about 3.8% today. That tells me that that bond, or the buyers of the bond, see inflation somewhere around 3% or even lower. Well, I'm not sure. Inflation was reported today at 7.7. There's a long or a big difference between 7.7 and below 3%. So somebody's fooling somebody around here, and I think there's a little bit too much excitement going on in that part for me to step in and be a bond buyer. We're still on the sidelines here and think that there's more interest rate backup that's necessary before this inflation war ends. So we sit by and we watch, but it's an amazing move. One more thing today, the US dollar broke. And by breaking, I mean it's broken some technicals that it's been moving on and building for quite a while, and it broke down lower. Now, what does that mean? Well, gold today is up sharply, and those commodity stocks that deal with iron ore and copper and zinc and those kinds of things, they're all higher. Now, we happen to believe that the dollar's been a deterrent or been a barrier to making money in the commodity stocks, but maybe that time's changing. So we got to go back to the Ouija board and look at it, but the commodity stocks that we do own are doing very, very well. So there's always a bright spot somewhere, and this environment is slowly changing. By slowly, I mean minute to minute, changing to something different that's going to be more permanent. Right now we're in transition, and we wish the heck they'd get the vote counting machines going and get this thing behind us. But in the meantime, we're going to be sitting around looking for opportunities to grab here and there. But a weak dollar would be good for U.S. companies that are global, that sell their products around the world. Coca-Cola and companies like that are well-known, large, multinational companies ought to do well with a weaker dollar. That pops their earnings up. So the story unfolds. But we're leaning a little bit more positive, and we think this battle against inflation, this battle to bring demand down, to help the inflation thing that the Federal Reserve's been doing, is closer to an end than a beginning. Okay, that most of the battle's behind us, and we think this political delicacy, this political balance is so delicate, will have an answer for us pretty soon. But that delicacy may be a big value to us, right? And that we don't get anybody charging off in any one direction. Anyway, hope springs eternal. We'll be in touch, but hang on, it's going to be bumpy for a while.